Today I'm going to share with you one of the most surprisingly powerful trading strategies I discovered. What makes this strategy so great is that any trader can use it, from complete beginners to experienced pros. You don't need any completed indicators. All you need is discipline, so you can start using it right away. Okay, let's get started. But before we dive in, make sure to subscribe to the channel and like this video to support me. Indicators used in this strategy. In this strategy, we rely on two powerful and free indicators, RSI and Linear Regression Candles. RSI, or Relative Strength Index, helps us understand the overall market trend, whether buyers or sellers are in control. This gives us a clear idea of whether to focus on buy or sell setups. Linear regression candles, on the other hand, are designed to smooth out market noise and show us precise entry points for both buying and selling. When combined, these two indicators create a simple yet highly effective system that can guide your trades with confidence and clarity. In the next part, we'll take a closer look at each indicator and learn step by step how to use them effectively in your trading. Linear regression candles. Alright traders, first thing we need to do is click on indicators at the top of our trading view chart. Then search for linear regression candles. Make sure to pick the one created by UGURVU. That's the correct one. Click it and now it's added to your chart. Now take a look. You'll see another set of candles overlaid on your normal candlestick chart. Let me show you the differences. Look at your normal candlesticks. See how choppy they are. So many small candles make it hard to find the real trend. Now look at the linear regression candles. Smooth, continuous green candles in uptrends and red candles in downtrends. Much easier to see the trend, right? To keep our chart clean, double-click on the original candlestick chart and remove its visual components. We only want the linear regression candles visible. Trust me, this makes your analysis much easier. These candles are a bit like Heiken Nashi because they are smooth, but don't get confused. They are different. Linear regression candles are based on a statistical model called linear regression. What that means is they use past price data to predict the trend and remove random noise. Basically, they show you the real trend clearly. There is also a moving average line on this indicator, set to 11 by default. Let's adjust the settings so it works perfectly for our strategy. Go to Settings. Set the signal smoothing to 7. Linear regression length to 11, and make sure all options are checked. Then in the Style tab, change the line thickness to third option. This just makes the line easier to see when you are deciding on a trade. And that's it. Now your chart is clean, smooth, and ready to find accurate entry points. RSI, Relative Strength Index. The next indicator we are going to add is RSI. Going to the Indicators section, search for RSI and add it to your chart. Now let's set it up properly. Go to the settings and set the RSI length to 14. In the Style tab, active only the 50 level and turn off all other options. Make the RSI line and middle band thicker so they're easy to read on your chart. And that's it. Simple, clean, and very powerful. Here's how we use it in this strategy. We focus only on the 50 level. We don't care about overbought or oversold levels here. RSI 50 acts as our trend filter. When RSI is above 50, the market is in an uptrend, so we only look for buy signals. When RSI is below 50, the market is in a downtrend, so we only look for sell signals. This single line will guide all your trades when combined with linear regression candles. In the next part, we'll see exactly how to use both indicators together. Entry rules. Now we'll focus on short trades or selling. First, make sure RSI is below 50. This tells us the market is in a downtrend, so we only look for short opportunities. Next, watch the candles for a pullback above the moving average line. In a downtrend, prices sometimes move up temporarily, and this is normal. We wait for that pullback to happen. Then, when a candle closes back below the moving average line, it signals the end of the pullback, and that downtrend is continuing. Make sure RSI stays below 50 during this signal. This confirms the momentum is still bearish. When all these conditions line up, we enter a short trade at the close of that candle. Now let's look at a long trades or buying opportunities. First, check that RSI is above 50. This shows that market is in an uptrend, so we only focus on buy setups. Next, pay attention to the candles during a pullback below the moving average line. In an uptrend, prices sometimes dip a little before continuing higher. This is normal, so we wait. When a candle closes back above the moving average line, it signals that the pullback is over and the trend is likely to continue. Make sure RSI stays above 50 at this time, confirming the momentum is still bullish. Once all these conditions happen together, we enter a long trade at the close of that candle. Real market examples. Buy trade. Here, look at the chart with me. See the RSI at 57. This tells us the market is in an uptrend. Now notice the candles pulling back below the moving average line. This is normal in an uptrend. Watch carefully. Now a green candle closes back above the moving average line. This is our signal to enter a long trade right here at the close of this candle. Now let's set our stop loss just below the previous swing low. That's here, to protect us if the market moves against our trade. For the take profit, we set it at a level about twice the distance of the stop loss, so our risk is controlled and our reward is bigger. Now watch the price move up to our target, and that's a successful long trade. Let's look at a sell trade example. Here on the chart, take a look at the RSI at 42. This shows the market is trending down. Notice the candles moving up slightly above the moving average line. In downtrend, prices sometimes retrace a little before continuing lower. Now watch closely. A red candle forms and closes back below the moving average line. This is our signal to open a short trade right here at the close of this candle. For safety, we place the stop loss just above the most recent swing high. And again, for the take profit, we set it about twice the distance of the stop loss. So the potential reward is larger than the risk. Now we watch as the price moves downward and reaches our target. That's a clean, successful short trade. Time frame and market. Now let's quickly talk about time frame and which market to trade. This strategy is flexible. You can use it for different trading styles. For scalping, use short time frames like 1 or 5 minutes. For swing trading or day trading, try 50-minute, 1-hour, or 4-hour charts. For longer-term trades, daily charts work best. If you're just starting out, I recommend 50-minute or 1-hour charts. They are easy to follow and less stressful. As for the market, you can trade any liquid asset like Forex, stocks, crypto, or commodities. The key is volume and liquidity. Avoid low-activity markets because big spreads or gaps can hurt your trades. That's it. Choose the time frame and market that fits your style and comfort, and you're ready to start looking for setups. Okay, that's it. This is a linear regression candle and RSI strategy. It's simple, clear, and very effective for trending markets. If you found this video helpful, hit the like button, subscribe to the channel, and turn on the notification bell so you don't miss any future strategies. Also, if you have any questions, drop them in the comments section and I'll reply as soon as possible. See you in the next video. Happy trading!